Welcome to the Hamsi Analytics Daily Market Commentary. I'm Pablo Navarro. Today is Wednesday, October 24th, 2012. For the market internals, the New York Stock Exchange advanced decline differential closed at negative 302. Nasdaq advanced decline differential closed at negative 298. We had 4 new 52-week highs for the S&P 500 and 9 new 52-week lows for the S&P 500. For the volatility, 274,000 contracts traded on the VIX today, with 40 million in total premiums paid. For the dollar-weighted put-call ratio in November, we saw a 0.69 reading, which is neutral with 49% of the total premiums paid, and in December, a 0.45 reading, which is bearish with 34% of the total premiums paid. Here we have the daily chart for SPX. We have another down day, 4.36 or 0.3% for the day. We confirmed yesterday's big sell-off with another one, and the interesting thing is how we dropped. We were up in the morning and then dropped throughout the day, finishing almost at the lows of the day, which is not very positive here in the market. We're looking for 1400 here as our next level on SPX daily chart, and maybe if we break that level, go to this 200-day moving average at 1375, but that of course is a long way from here. If we look at the moving averages chart, here we have it. We broke support here, very important support first on this trend line. We talked about coming and testing this level. Well, we came the first day we hold, and the next day we just went through it without even looking back, and today we have another down day. We broke yesterday's lows, which was also bearish, and now we're looking for this level 1400 and maybe the 100-day moving average at 1394.5. That's going to be the levels to watch here on the downside. If we get maybe a bounce from here, we're looking at previous highs here of March and April around 1424. That's going to be our resistance on the upside here for SPX. Now let's go to SPY and let's get some targets here for SPY. We're looking for 140 and 139.66. Those are our two levels in line with SPX we just talked about. And on the upside, maybe look for this level around 142.24, 142. And if we get even a bigger bounce, go and try for the 50-day moving average, which is at 143.75. Let's go here to this chart. We have today an interesting day. We have an outside day reversal on SPY. Very interesting here. The way we sold off. Fed minutes were not very interesting. FOMC. And here we got what we got here. We got an outside day, which is very bearish. And we are already at almost negative 3 sigma. So it looks like we're going to continue down for the shorter term here. As for the targets, we're looking for 140.46. That's going to be weekly support number 2, and if we get a big sell-off, maybe 138.15, but that's too far away here. We got a lot of moving averages before of that, so we're looking for 140 and maybe 139 on the worst case. Now let's go to the Qs. Here we have the Nasdaq ETF, and we have another big bad day today, 0.20%. Not as bad as SPY, but again, we are at 65.14. We were looking for 64.75. That's gonna continue to be our target here. 64.75 on the downside and 66.50 if we get a bounce. As for the moving averages chart, we are at the 200-day moving average. Very important and interesting level here. You can see here this purple line, the 200-day moving average. We do not want to close below this line. Maybe try to get a bounce from here even to the 66.5 level. That would be maybe a relief rally or a dead cat bounce. You could see the big pull that we had on the Qs. Very big pull back from the highs we've made previously on the year. So we want to hold this level. Looks like the Qs have a lot of pressure on them right now. Tomorrow we have Apple and Amazon coming out with EPS. That's going to be the critical thing here. If they fail, they come lower than expected, we are going to break that 200-day moving average and maybe even look at numbers around this 62 level and then 60. Those are going to be the targets in case Apple and Amazon miss. So we're going to have to wait and see what tomorrow brings here with the Qs. Now let's go to IWM. Another bearish chart here, not as bearish as Nasdaq, but we had this big pullback. We were basically flat today for the IWM. This is the Russell 2000 ETF. Yesterday we talked about a bounce of this 200-day moving average, and today we did not touch it, and we were kind of flattish here for the IWM, maybe looking for a test of 82.50. That's going to be important here, and if we fail here, maybe another test to this 80.43, which is the 200-day moving average, until one of the two sides gives. So that's going to be the range 80.40 to 82.50. Very tight range here. Maybe a sell-off could break that either way. So watch here the risk on, risk off ETF. As for GLD, here we have the GLD chart, and of course again another bearish chart here in the market. Of course we sold off pretty hard here. We broke the 50-day moving average on a gap down overnight with the futures, and now maybe looking for this 200-day moving average. Looks like we're slowly getting here. We have big days here, an outside day reversal for GLD also. Almost an outside day reversal, I'm sorry, but a big day, and almost finishing at the lows of the day, which was not positive. So we're looking for 161.41. That's going to be the 200-day moving average, and where GLD most likely will find support. As for the VIX, we broke out the 200-day moving average. We're getting a breakout here on the VIX. We are at positive 3 sigma, but the sigma channel width was very compressed. So we could still see higher prices, maybe 22s, 21s. And if we get a big spike, maybe go to 24. But that, of course, would be something happening that no one is expecting. But the target here, 21, 22 target, that's going to be pretty close from here on. And maybe if we get a sell-off, test this 20-day moving average, 0 sigma, at 15.9. Those are going to be the target. Looks like the VIX does not want to go lower from here. We finally broke the 200-day moving average, and we're start getting more bearish in equities here according to the VIX. Here we have our McClellan oscillator. We are oversold short term, not extremely oversold. You can see here, this is extremely oversold, this reading here. But we are only at negative 120. So this means we could still go lower from here. Maybe test this 200, negative 200, and then get a bounce. But just keep in mind here, we are short-term oversold. We have a special offer by TradeStation. Get your HAMSA Analytics proprietary indicators paid by TradeStation. Contact Active Traders office in Chicago, Peter Albino, at the number listed below. Have a great day, and I'll talk to you tomorrow.